What's up, bitches? Welcome back to another video. Today's gonna be another trade recap. So quick little notice before we even start the video. I just want to do like a little disclaimer. Okay, I'm not a financial advisor. I don't teach you how to make money. This is just for legal purposes only. Okay, I'm not a financial advisor. I do not work on Wall Street, and I do not give you tips on how to make money. All right, let's just get straight into it. Another disclaimer. I am on a $50,000 account funded that I'm trying to pass right now. I bought it this weekend. So I will be more active in the futures section than SPX. I do have some contracts here and there with options that I'm planning to trade, but in the moment, I'm more focusing on this funded account as it renews every month, and I don't really want to pay another $50 to grab to stay on the funded. I kind of want to pass it or fail it, before the month ends. So I'm going to focus on that. So far, it's going pretty good. So let's talk about NQ today because that's what I traded. But I also realized that once you have the funded account, it also gives you NQ, it gives you NQH and ESH for the mini contracts. So I will probably trade ES tomorrow because it's with the S&P 500, and that's what I usually trade. Because this price action here on NQ, I personally am not, I'm not used to it. So there was a few losing trades here and there, but we came back. Okay, let's talk about what happened. All right, so first on NQ here, we have a few notes to talk about. I'll talk those about in a few seconds here, but a few things I want to notice is this Asian session. Also, this was the all-time high here. Asian session comes down, not too much, no volume. We'll create some Asian highs and Asian lows. I knew that these Asian highs and Asian lows were going to be pretty significant. As you can see, Asian lows get swept out during London in a way, kind of in the kill zone. So that's a no already. As you can see, London lows down here and London highs. And then once we get into the New York session, you can see that New York session AM, not the trading AM, but the pre-market takes out the London highs, also takes out the Asian highs. So that gives me two confluences here. Okay, let me just mark the London highs here. Two confluences of what's called a buy side get taken out. Notice how this price also creates a new all-time high right here, and then it goes even further. 730 creates a all-time high right here, and then what happens? Then we go down, we displace down, 8:30 opens. New York AM session is open, and then what I'm looking at right now was this London low, and there was these low resistance liquidity down here on the south side right before London low. So I was expecting all these levels to get hit during the AM session, which is exactly what we got. As you can see, what happened on let me delete this for a second. What happened on at 9:30 or before 9:30, 8:45, boom, 9. We get the sweep of those London lows, which is big sell side, because that's the only sell side we have before any fair value gaps or anything like down here. Personally, in terms of where we're going to be targeting, I did not expect this to be anything, and this is actually a 2-hour fair value gap or a 3-hour fair value gap. I think it's a 3-hour. If I'm not wrong, it is a 3-hour fair value gap. And the problem with this is when you look at this range here, right? Obviously, you're expecting off the all-time highs, you're expecting someone gonna move down. And I'll talk about the price action today and why I just didn't like it. It was just shitty overall, because it really did not come down at all. Like, yes, it did come down, but when you're talking about the range itself, I'll just draw it real quick. It didn't come down to the consequent encroachment here, and we're on the 3-hour. Even if you go to the 4-hour, right, the swing low is even lower. Actually, this swing low for the 4 hours all the way down here. So you can see it just bull run, bull run, bull run, bull run. But if you go on like the 1 hour, for example, that's what I'm looking at. That's the swing low in the 1 hour. That's the swing high in the 1 hour. You can see that the consequent encroachment or the equilibrium does not even get hit. So I was confused onto why this 3 hour randomly gets hit and traded into. That was very confusing. Even if you go down to the 3 hour, you can see there's no range, nothing, right, that gets created here. There's absolutely no reason for that to be traded into. So I was confused. I looked through every single other time frame. You can see the 1 hour here, nothing. And you go to the 30-minute, maybe you can say, oh, well, there's this swing low here, and then there's that swing high. And yes, it trades under, 30-minute fair value gap. You can do that. But the only thing is I didn't like the 30-minute range because this didn't have any retracement, right? And so a range inside a range, I like to go over the bigger range instead of the smaller range, especially on a bull run like this. You'd expect price to fully come down into a bigger range. Now, the only thing that I'm not too worried about and that I'm not too focused about is, yes, it did hit a 3 hour fair value gap in a premium. But what's not worrying is that price didn't come back and create all-time highs. Look where price stayed. Price stayed, let me just hide this. Price stayed in this, under these highs, which showed me personally that price action was still bearish. So yes, it was bullish for 2 candles in an hour, and then it came back bearish, right? So that tells me, okay, price does in fact want to go lower. The draw is in fact a fair value gap in the discount zone for either to go back up or go down. Who knows? Again, I'm still expecting price to come all the way down to, let's see, where are daily levels? All the way down here. So we're really expecting price to really do a big bearish run all the way at least to the previous all-time highs down here. So that's a big ask for NQ and for SPX. And as you can see, I want you to notice on the 1 hour just here, equilibrium is here. It can easily get to here like tomorrow. And then we have 2 very strong fair value gap. Mostly this one I'm looking for on the 1 hour, and you can even go on the 4 hour. Obviously 4 hours the whole range here, but if you do the 4 hour range, which is just a little bigger, you can see that the equilibrium to buy it back up is under this all-time highs, or this previous all-time highs, right? And daily market structure shift is all the way down here. So yeah, that's going to be tough. The only thing is I think this is going to get updated, because when we go back to the daily, for example, if we come down and we hit like a discount, it's going to create another swing low, or higher low, and then another high, and then that's where we create the market shift. So I don't think this is going to be our market shift here. It's going to be a little higher up here, which is fine because it's actually happening sooner than expected. So that means that we can actually now, if we do get a market shift up here, we can now actually target this sell side and that sell side, anything below. And that's going to give us a nice standard deviation all the way down. So possibly hoping to see that. Anyways, that is not talking about our trade today. So let's go ahead and do that. So what did I leave off with? Left off with swept all-time highs at 9:30. Very bullish sweep, comes up, sweeps all-time highs, and then we go down. As you can see on the 5-minute, we have this swing low. Might be hard to spot, but it's a swing low, creates a swing high. So you can see from this candle and that candle. Boom, 5-minute market short shift. I'm now looking for a sell model, and I even told this in my Discord. I'm looking for a sell model. I'm looking to go short on NQ. The problem is, and I'll point this out right now, this is a trade idea. I did not take this trade. I personally did not see this until later, until I saw this whole down move coming in. And I was like, oh shit, I think we just missed our entry. But guess what? That's fine, because you can still trade this. The model itself teaches you how to get in this range, right? That fair value gap. I'll just go over the model. Fair value gap, or market share shift happens here. Okay. So let's delete this. Let's delete this. Let's delete. Oh, we don't need to delete this. Let's delete this. Okay. Let's delete this. Boom. Okay. So let's look at this. Right now, you might not see anything, but I see something very clear. So market structure shift happens on this candle. We want this candle to obviously close under this, which it does on the 5 minute. Now you're looking for an entry on the 5 minute, but if you can't find a fair value gap that happens in the displacement leg, you go to a lower time frame, right? What do we get? Market structure shift closes under. You can see this candle comes down, doesn't close, but trades all the way up. That tells me there's a strong buying pressure that it wants to come back into a premium. So what do? We draw the range. I'm going to draw it nice and pretty for you guys just so you can see. But you can see this green line is the premium. So that's where we want to have our fair value gap or anything marked out in there. What do we get? So yes, there is a 5 minute fair value gap here you can mark out. Okay. But that's a little too close, and that's almost inside. That's like trading inside the discount and like in the premium. So I don't really love that. We'll mark it. We'll mark it here. Okay. I would you also notice there's a balanced price range on the 5 minute, which is right here. Okay. And that's useful on SPX. We'll talk about that. But there is a balanced price range because this fair value gap gets taken out by that fair value gap. You can see there's a balanced price range. Okay. So we'll keep that there. We'll go to the 3 minute, a nice lower time frame. Okay, is there anything on the 3 minute that we notice that could be happening, maybe helping us at the moment? Not really. Really nothing. Let's actually look where our OTE is. Swing high to swing low, OTE, and we drag it out. Okay, so I was hoping for a move up into the OTE, but like I said, not every entry is going to be perfect, and especially when the selling pressure is already happening. You can see it's very obvious that we can want to sell. On the 1 minute, as you can see, we have this balanced price range still, but you can see the discount. I mean, that consequent encroachment, which is where we want to enter off, okay, as you can see here, is right on the equilibrium. That's usually, price does not usually tick into that by like half a tick. So we can delete that because I know damn well that's not being used as an entry. I want something above, at least like 1 or 2 ticks above the equilibrium of this displacement leg, okay? The OT is showing that it can go higher, but what's right before the OT? I want you to notice this on the 1 minute, and that's important. This is important. This candle right here, this green candle, is called an institutional order block, and I'll mark it out. Now, the reason for that, why it's institutional, is because it's a bullish candle in a bearish order flow. When do you see that? It's a whole, this candle, that candle, that candle, that candle, that candle, that candle is all black. It's all red. It's all selling. And then you have this one little tiny up candle, fully engulfed green, fully closed green. It's kind of weird, no? Anyway, ICT teaches that that is an institutional order block. Now, most people would draw their OT like this, right? And you'd enter off the consequent encroachment here. All I did though on my chart was mark the bottom of the order block. That's usually where it gets tapped in most of the time. You just mark it like this, boom, right? As you can see, when price came into tap, it tapped into the OT levels, not quite into the golden zone, but that's okay because we did trade into this order block, and this order block does cover most of that zone. So to me, that was fine. You know, swept the order block here and then enter that zone of the OT, which is fine. To me, that's fine. And we're well above the equilibrium, so we can now start selling. Okay, so let's go back on the 5 minute and let's see what kind of impact that had. As you can see, 5 minute trades down, trades back up. That's fine. We'll allow it. There's no stop loss. You probably had your entry somewhere around here, right? Now my stop loss would have been here, or it would have been probably above here, right? And then the take profit. This is where it kind of gets tricky. So you draw the standard deviation with this, but your take profits, right, would be on this sell side of the curve here. But the thing is, there's a lot of liquidity points you can target, right? So this is where I use the standard deviation, and as you can see, standard deviation also lined up with this 3-hour fair value gap, not to the tick, but it did, look at this candle. It did respect that standard deviation pretty well here. So I do keep using standard deviation all the time. And when I drew this out, right, to the -1, you can see right away the risk to reward is 6.5, but I had mine up here. And here it's a 3.5. So usually you want something like this, because usually my trades are to the -2 like this, and they're usually like a 3 something. So it usually looks something like this because the OT is a little bigger. So this is fine. -1 target is fine. That was a fine target. You can see it gets hit right away. But unfortunately, I missed that. I missed that. That was not a trade I took. That's not a trade I took on the funded. That's not a trade I took at all. But what I did do is on the funded, and we'll talk about this. I know it's going to be overwhelming because I was fucking around, but I'll show you my executions real quick. Where are my executions? Oh, I gotta, okay. Here are the executions. You can see I did quite a lot. Made a few mistakes, but this was the funded. I promise this will never happen again. This was just me fucking around with money, which is not good. But you can see the first time what happens. We bought here, we sold, you know, nice little $5 loss here. We did a lot. But this is where I got, you know, serious. I shorted the retracement back to, I'm pretty sure this was a 1 hour. No, it maybe a 30-minute. It was something with a, I know it was an order block or something. Where was this? No, it was not a 1 minute. Was it a 3 minute? It was a 3 minute order block. Yeah, that's the one. So 3 minute order block because I was trading on 3 minute here. You can see it taps into that. Now, the whole reason behind this trade here was because I was expecting obviously price to respect this move down. Obviously I was also expecting to come down to the equilibrium of the whole range. So I was expecting something down here. So I was expecting a move lower, and obviously when you know price, when price wants to move lower, it's going to respect these PD rates. It's going to respect the ranges that are created, and it's definitely going to respect the discount or the premium, and it's also going to respect any kind of order block, any kind of, well, especially order blocks and fair value gap to go lower, or, you know, to go higher if you're trading bullish patterns, right? In the 3 minute, you can probably draw a range that gets created here. Let's just see. It's above standard deviation, or above equilibrium, so we can start selling. That's another reason why. God, there's a lot. And then there's a fair value gap here that gets respected again. This was kind of like choppy because I didn't know we were in this 3 hour fair value gap. Choppy. I was expecting this fair value gap to get inversed. You can see it did sweep that fair value gap down here. And then we chopped the whole way around. Now, the reason why I didn't like NQ today is because this price action didn't quite correlate with what happened on SPX. And I'll show you what happens. Actually, let's just go to SPX right away. What happened on SPX. And this might be a little cleaner and a little nicer to see. But what ultimately happened, let me just delete this, was this balanced price range that happened on NQ, but also happened way more cleaner on SPX. And you can see that there's two things I want you to pay attention. Two things. First of all, this range, this discount. Let's just, let's delete this and let's make it a little prettier. Let's do something like this. Or maybe something like this. Okay. As you can see right now, you can see that this range from this swing high to that swing low respects equilibrium. Premium taps into the premium. What is also tapping? This balanced price range on the 15 minute. Respects. Does not close above, doesn't trade above. Closes under consequent encroachment. Okay. We trade down, we trade down. This is where you could draw your standard deviation of that, where was it? 5 minute, 5 minute, what's it called? Where was this actually? I think it's a 5 minute market structure shift that also happened. It's down here. Okay. You can see that the -1 level on SPX, when does it get taken out? It gets taken out at 10:45. Let's go back to NQ and see when this level got taken out. At 10:45. Okay. You see? Those levels correlated. And then what happened? We took out the -1.5 on SPX at... Oh, no, we didn't take it out. My bad. We didn't take it out. We got close. We didn't take it out. But anyways, this balanced price range, right? When we make that swing low, look at this discount and premium. We go even lower, and what happens? We're into the premium. Look at this balanced price range. And this is the 15 minute. I mean, the 5 minute has enough candles to go up and break out. It consolidates. Let's go to the 5 minute. Let's just see what happens. Closes. Everything closes under. So for me, what does that tell me at this point here? That tells me that price does not and probably will not break out of this range under here for the rest of the day. Okay, so you can go short off of this if this, doesn't, because this is at 3:30. Personally, I wouldn't trade after 3 or before, 2:50. That's really when the day is over, to be honest. Just looking at SPX2, you can see this is just crappy price action. It is back and forth consolidating. It is back and forth price action. The only trade you could have gone is the sell model here. But even on SPX, it's a little hard. I'm not even sure you can on SPX. SPX just kind of ran off. You can see on the 5 minute, there is a sell model, but it doesn't quite get taken out. It doesn't quite work, but you can see there's a higher low that gets created, then a swing high, all-time highs. Only thing with SPX is that it doesn't sweep anything else, right? There's no Asian session, anything over here, like NQ, right? So it did create like an SMT with NQ over here. But it ran up, came down. And then this is where I got kind of concerned, is it came down, but didn't sweep this market structure shift. It closed above and it ticked on the level. So this is the new market structure shift, or it's the same level. I just consider it the same level because it's also a higher low. It's the same higher low. It's the exact same if you really want to treat it like that. Only problem is some people would say, oh yeah, you treat this higher low and that higher, and then that's the market structure shift. But the thing is, this is still the swing high and that's still the swing low. So that's still the range because this is the same range, right? The only problem is when you do your OTE and you draw the whole range and the whole continuation, right? Let's just do this. Price doesn't quite come back, as you can see. You don't even get an entry at all. That's the problem. But you can see just off the price action, you saw something on NQ. So we saw the sell model happen on NQ, but not on SPX. It probably could have happened on a lower time frame. I just didn't see it happen nor took it. But you can see the market shift happen on this candles, and you want to see these candles at least trade higher than this balanced price range. But again, that tells you something. If candles don't want to close above this balanced price range, what does that tell you? That tells you it just does not want to be bullish at that time. And if it doesn't want to be bullish to go bearish, it will still bearish. It will stay bearish. But very, very choppy. Again, this is like right at an all-time high. So really would not want to trade that at all, but I did. DXY looks consolidating. It's very, very tempting right now, but we got our notes here for the weekly outlook. It looks bullish, it looks bearish. People say it looks bearish. People say it looks bearish. Bullish, bearish, bullish, looks neutral. We do have that weekly order block that is playing a big part right here. Again, institutional order block. If we do see this order block get inversed, that means that the indices and the futures will start going down a little bit. If we see this get swept and like this creates a doji on the week, then that means that we could be heading for way higher highs, and that's something I don't want to trade. So I guess we'll see. That was your kind of little trade recap. Sorry the video was short, but if you guys want to join the Discord, everything's in the link in bio. Or not, I can just comment the comment on the, can just comment the link and pin the comment. All right, I'll see you guys very soon, and hope you guys have a great